morning. Well, I'm the CEO of Uganda Stock Exchange. That's one. But I'm also the current chairman of the East African Securities Exchange Association, and of course, I'm a member of the African Stock Exchange Association Executive Committee. So I have a number of areas of interest. But I'll take you back to starting maybe with Uganda. We have an exchange that's about 15, 16 years old. Current capitalization is about 7 billion US dollars. Still, small, but there's a number of things happening there now. Together with our colleagues in the East African region, we are now building a regional market. And very soon we shall be launching our first regional bond, a bond that's going to be traded and sold regionally. That's a result of years of work of building an integrated East African market. So it's going to be the first security listed in the region. And you will find that I found my colleagues talking about downside risk, but it's mostly country risk. But whenever you take up a regional product, that downside risk is diversified away almost immediately. So you'll find that securities that are being sold regionally, starting with this particular one that I'm talking about, are going to have a deeply reduced downside risk. And we think that by building a regional dispensation, first at the East African level, and secondly at an African level, we're going to find that we shall be presenting to you and to other investors from other parts of the world very high quality securities which you can hold for a long time, for which you will not have significant downside risk arising from the events that Africa has been known for. But that's really on the downside. But we find in Uganda struck oil 6 years ago, and we think that in about the next 2 or 3 years we should start producing oil. Kenya struck oil last year, and they've struck oil again this year. Tanzania has not struck oil yet, but they found lots of gas, and I'm told that the quantities of gas in Tanzania are probably next to what we find in Qatar, okay, in terms of the quantities. So East Africa as a region is becoming exciting because of the new things that are happening. There's old things, there's old wealth that we have, which is still sitting in the ground, but it's becoming an exciting place because of the new things that we have. And we believe, we who are running the exchange sector feel that we should now start to build a whole host of securities opportunities on the opportunities that we have, on the oil and gas opportunity that we have before us. So I just want to ask you to watch that space. We think there's going to be a lot more news coming out of there as a result of the new finds. I guess I'll punctuate it there.
How do you think investors can access your capital market opportunities? Because it seems like a lot is happening.
First, of course, there's the sovereign capital market opportunities. We have our governments, I think, are issuing instruments that are offering a better return than you'll find in most parts of the world. The yield on government debt in Uganda and Kenya, probably even Tanzania, is higher than I have seen so far anywhere in the world. And I find while the governments are able to pay, it's not junk yield. The governments are able to pay, but it's really a healthy investment opportunity. And we think if you're networked through banks like JP Morgan has access to securities in our markets. Fund managers, I think I have met fund managers like Northern Trust, who are networked through into our markets right now. So through those banks, an American investor can reach that opportunity. But you can also come directly, set up shop in the region, and then you'll be able to access the securities quite directly. We have between Uganda and Kenya, I think we have a total of about 45 securities brokers who are available to drive, to drive any business opportunity onto the markets right now. Kenya is a wholly automated securities market, just like Mauritius and South Africa, fully automated. So you can get access through to that market through, and you get your trades done at the pace that you're used to. Uganda is only partially automated. Tanzania, I think, is fully automated as well. So you can get, trades in Uganda will take you T+4 or T+5, depending on the asset class that you're buying. But trades in Kenya will probably take you T+2 to T+3 to execute. And that's improving, and we think that in the next few months, we should be able to get T+1 in Kenya, while we get maybe T+4 or T+3 in Uganda.